When traders talk about the US dollar, most people immediately think about interest rates, inflation, or Federal Reserve decisions. But there's another powerful force that often matters even more. That force is risk sentiment. Understanding how risk sentiment drives the US dollar can completely change the way you see the markets. So let's break it down. Risk sentiment is simply how investors feel about the market. Are they confident and willing to take chances? Or are they nervous and looking for safety? When markets are calm and optimism is high, investors enter what's called risk-on mode. In a risk-on environment, money flows into stocks, cryptocurrencies, emerging markets, and higher-yield currencies. Traders chase returns. And during these moments, the US dollar often weakens. Why? Because investors don't need safety. They're comfortable taking risks, so they move money out of the dollar and into assets with higher upside.
If you're a trader limited by account size, Instant Prop Fund gives you a faster way to scale. Trade with firm capital, skip long evaluations, and keep a competitive share of your profits. With clear rules, flexible account options, and fast withdrawals, Instant Prop Fund is built for consistent traders, not gamblers. If you're ready to trade bigger without risking your own money, check out Instant Prop Fund. Link in the description.
The USD is the world's reserve currency, trusted in crisis and used in global trade. When fear spreads, demand for the dollar spikes. Fear creates demand for safety, not risk. The dollar represents stability. That's why it rises even when US data is weak. It's about survival. Liquidity is key. In market stress, investors sell assets for dollars, the most liquid currency. Understanding risk sentiment is essential. Focus only on data, and you'll miss the bigger picture. Is the market comfortable or afraid? Confident? Dollar struggles. Fear dominates? It thrives. Look beyond the chart. Watch equities, bond yields, volatility, and headlines. Because the dollar doesn't just react to data, it reacts to emotion. And emotion moves money faster than logic ever will.